My name is John Reyes. I'm a wealth advisor at Reyes Group in partnership with IA Private Wealth. And this is Jillian Seguin. She is an associate wealth advisor at Reyes Group at IA Private Wealth. Isn't it?
John, is that
Craig!
Oh, hey, John.
Hey,
what?
what are you doing here?
What in the world?
Well, I mean, you could have picked a closer park to downtown, but I decided to come here anyway.
As a young man, heard the sky's the limit. First thing first, I'ma break through the ceiling. One life jam, but it feels infinite. One life damn, then I better go get it.
Ladies and gentlemen, we have been honored by the presence of Craig Basinger. He is the Chief Market Strategist at Purpose Investments. He brings a wealth of knowledge, 25 years of knowledge in this industry and degrees in both psychology and economics. And currently, you manage a small fund, roughly 2.6 billion.
Fairly small.
Yep. And you focus on what? Strategies of dividend mandates?
Some dividends, some quantitative, and I love the outdoors.
There we go.
So clearly, everything's coming together.
Win-win. Well, we're so happy you could join us today. We just wanted to have a quick chat, really. We wore sensible shoes and we're out for a walk. So, you know, the scenery here is beautiful. We're in Canada. You focus a lot on growth opportunities or just investment opportunities outside of the US, which has been a main focus for a long time. So emerging markets really had a banger year last year. And Canada, we did well last year and we're, you know, setting up the same pace this year. Why?
Well, listen, I think there's a lot of good things going on out there. You know, I'm going to highlight the economy, even from a global perspective, is doing quite well. Canada might have slowed down a little bit, but that's a bit more of a slowdown technical side. And listen, earnings growth has been really strong, so there's a lot of good fundamental news out there. But I would point out we are probably in some sort of AI bubble at the moment, and things are getting exciting.
Yes.
Both up and a little bit down, but certainly more up these days. So we're certainly in an interesting time, and I think it's increasingly becoming a late cycle phenomenon, which I think is going to require, you know, a bit more of a prudent stance going forward.
You've teed it up beautifully for my next question. John and I wanted to know about this AI bubble. Where are we? You know, there's still people thinking they can get on that train, or should people be taking their profits? Where are we on that bubble?
Well, that's the tricky part with bubbles. You don't know how big they're going to go, and you don't know when it ends until, well, after.
Yes.
But I would say, listen, markets have enjoyed outsized returns. This is a real technology that is changing people's behaviors and workflows. Like the potential productivity gains are real, and a lot of very large trillion-plus companies are spending money to make sure that they're leaders in this space. And when they're building tech data centers and hardware, that is a very good sign for earnings and for the economy. Has it gone too far? Will it go too far? History teaches us, us humans, we're really good at taking a good idea, funding it really well, driving it along, and then going at least 100 yards further than we should. And that's probably how this one's going to play out. Are we at that point yet? I don't know. It's certainly getting pretty frothy out there, and I would say a lot of the gains have probably already been made.
You bet. Oh, John, you're still here.
I am. And
okay.
You know what? I actually didn't have a question in our little staged attempt here, but I do have something that now has dawned on me that I do want to ask. In any type of growth that we have in this bubble, you're right, we do stretch further. We go a little longer. But isn't that what's required, though, for us to be able to take that next step in terms of it? Now, I know I'm maybe stepping a little bit outside the market side of it, but I'm really interested in, after the dust settles, what is it that's really going to be important about what is happening right now? Both historically, people making money, because it is going to pop. So do you have any types of thoughts about that, whether they're market related or otherwise?
I think it's important, you know, I make fun of us for taking ideas too far and obviously going way too far in a lot of cases. But I would say that's also one of the benefits of humanity. That is something that we have done historically. It can create a lot of wealth. It can eviscerate a lot of wealth temporarily. but it is how we advance our technologies and move things into new frontiers. And so even however this plays out and whenever the dust settles, like the positive aspects are we continue to come up with new technologies, and AI is certainly one that has a lot of potential to enhance how we behave and what we do and increase our productivity.
And over all sectors, really, right? Like
It's-
in the health sector and everything, really.
Yeah, listen, it's good. I don't know if it's going to change the world as much as people think, because that's of course what happens during a bubble. Everybody starts telling stories about, autonomous taxis. Those aren't stories; they exist.
Yes,
They're
they
a lot of fun.
exist.
I watched Total Recall. It does work.
I've ridden in a Waymo, but I would also point out autonomous cabs existed 5 years ago, and they're clearly not still pretty hard to find depending on what city you're in. So I would say, I think this is an exciting time. It's a great time for the markets as well. This will probably end with some tears, but on the way there, we're probably going to be better off technologically, and I think that's a positive
That's important.
net.
Yeah.
Thank you.
So we as advisors, one of the things that we are conscientious of is complacency with our investing styles. Are there pockets that you think advisors have become complacent? And what are the opportunities that you think they are avoiding or not taking advantage of?
Yeah, I mean, we see a lot of advisor portfolios, which are obviously then client portfolios as well. They're more models at the advisor level and actual portfolios for the clients. But I would say, broadly speaking, there probably isn't enough exposure on the international side, speaking from an industry perspective, given, I think, some of the opportunities and some of the lower risks in those markets. I think that's one of the components. But I would also say, we've published a content piece that was talking about, the profits often in the sitting. And what do I mean by that? Like, I get it. It's always exciting to, hey, I'm buying something new, or I'm selling something and taking profits or a loss. It's always exciting to talk about the transactions, but I'll tell you, for most portfolios, it's the stuff that's sitting there, that's working, that actually generates the wealth,
Yep.
and is much less about, hey, we're adding this and we're subtracting this. That's usually at the margin. It does change a portfolio over time, and there's certainly instances where you should make changes, but
Yeah.
I would say the vast majority of the wealth comes from in the
It's
sitting.
not a bad thing. It's not a bad thing,
No.
right?
And
It's
I'm going
working.
to admit that when we do our management of our portfolios going back 20 years or whatever that we've been doing this, there used to be that desire, to your point, where you were looking at it from what I would say bottom up, right? Look at what I can do with these individual investments versus the importance of maybe strategically following. I'll admit, we still take profits from individual positions. That's part of what we've done to be able to create balancing, but the drive of them has become more based on strategic rebalancing, not for the allure of look what I've done.
Yeah.
Right? And I think that is always a big challenge, because if you really want to distinguish or become a differentiator in, are you a broker or are you an advisor, is the big challenge for sure. So I'm glad that you put that way, because it's very eloquent of what you just said.
I have one sort of final question, if that's okay. I don't know if John has more, but
This was designed for you, remember? I didn't get many questions.
I'm the smart one. Okay. The 2026, looking up to be an okay year. If it happens to end up being like 2025, in hindsight, what do you think would be the sort of tailwind that moves this market higher? Or if it starts to fall off, I know hindsight is 2020, but if it starts to fall off, towards the back half of the year, what do you think some of the catalysts may be? In essence, what am I asking? The risks of 2026?
You want to know both sides. What could
Yes,
happen?
yeah, both sides. What's going to propel this higher, or what's going to be the biggest risk?
I'll start off by saying, when it comes to markets, it's usually the things that surprise us that are the ones that happen. But I will endeavor to,
Yes,
to
try.
answer
Go
this
into
question.
your
On
crystal ball.
Listen, on the positive side, this AI build-out of data centers is extremely positive for the global economy, not just the US, and I think that is driving a lot of earnings growth. And even behind that, even behind the technology side, the economy is on really good footing and is doing well. So I think those are probably the bigger drivers. We've got positive earnings revisions. That's the good news story. And that would be what would help continue these markets, because they've already had a pretty good first half of the year. So
Yes.
let's
I agree.
let's cheers that to begin with. I think one of the bigger challenges this year, I mean, we do have some US midterms. I don't think that's going to be all that much of an issue. I think one of the bigger issues could be, how far this sort of AI bubble has gone and how large it's sort of inflated in some of the markets. And if that stumbles, what that's going to look like. That's probably the biggest risk. We've had a SpaceX IPO, the biggest IPO in history. We have Anthropic and OpenAI coming quickly on their tails. There's no question that the founders and the founders of AI are trying to sell into the public markets as quickly as they possibly can. And if they're the smartest, with the smartest AI models, what are they telling us? So I think that's going to be probably one of the bigger challenges as this year progresses. But as I said, it's usually the unknown unknowns that really get us.
Yeah, for sure.
I would say that that's a pretty good, just to close it out, is what you just said about the wealth is created within holding, right? And yet here you are seeing these major, IPOs wanting to come to market. So somebody is getting liquidity. And I'm not saying that it won't benefit, but I do agree with you that this is something that, that
Well,
it is.
would you really come out here and disagree with him on camera?
No, I wouldn't actually.
Okay.
But anything can happen in the park.
There you go. Craig, thanks so much.
Thanks for having me.
All right,
really
safe
appreciate
travels
it.
back
Thank
to
you.
Toronto.
As a young man, heard the sky's the limit. First thing first, I'ma break through the ceiling. One life jam, but it feels infinite. One life damn, then I better go.
This information has been prepared by John Reyes, Wealth Advisor, and Jillian Seguin, Associate Wealth Advisor for IA Private Wealth Incorporated, and does not necessarily reflect the opinion of IA Private Wealth. The information contained in this video comes from sources we believe reliable, but we cannot guarantee its accuracy or reliability. The opinions expressed are based on an analysis and interpretation dating from the date of publication and are subject to change without notice. Furthermore, they do not constitute an offer or solicitation to buy or sell any of the securities mentioned. The information contained herein may not apply to all types of investors. The wealth advisors can open accounts only in the provinces in which they are registered. IA Private Wealth Incorporated is a member of the Canadian Investor Protection Fund and the Canadian Investment Regulatory Organization. IA Private Wealth is a trademark and business name under which IA Private Wealth Incorporated operates.